It begins with a seismic announcement. Geologists confirm the discovery of one of the largest gold deposits in modern history, located deep within the United States. The initial reports spark immediate attention from governments, financial markets, and global media. For decades, the U.S. has been a major player in global finance, relying on diverse economic sectors to sustain growth. Now, the discovery of a vast gold reserve promises not only to transform the domestic economy, but also to alter the balance of global commodity markets. Investors, corporations, and policymakers alike are forced to contemplate the potential economic, financial, and societal implications. The first impact is felt in the commodity markets. Gold prices, which have historically been influenced by global supply and geopolitical risk, experience initial volatility. Speculation about the U.S. gold reserve's size, extraction feasibility, and market availability drives short-term price fluctuations. Investors reassess portfolios, particularly those with exposure to gold, mining companies, and precious metal ETFs. Stock markets reflecting resource-based indices respond sharply to emerging forecasts and investor sentiment. Financial institutions react rapidly. Banks, hedge funds, and investment firms analyze potential capital flows, the effect on the US dollar, and shifts in global asset allocation. Investors anticipate that increased domestic gold supply could influence inflation expectations, currency stability, and interest rates. Stock valuations for financial service providers reflect the interplay between short-term volatility and long-term opportunity. Employment patterns shift dramatically. Mining operations require a large workforce spanning geology, engineering, heavy machinery, logistics, and environmental management. Regions surrounding the gold deposit experience a surge in job creation, attracting workers from across the country. Local economies boom, with secondary industries such as housing, retail, and transportation expanding to meet growing demand. Stock markets for companies involved in construction, heavy equipment, and regional infrastructure reflect anticipated revenue gains. The domestic mining sector experiences a renaissance. Companies with expertise in large-scale mineral extraction, environmental management, and resource processing see opportunities for expansion. Investment in mining technology, automation, and exploration accelerates. Stock valuations for mining firms rise sharply as market sentiment anticipates revenue and profit growth from domestic gold production. Supply chains adapt to the influx of gold. Refining facilities, transportation networks, and export infrastructure expand to accommodate production. Logistics companies, port authorities, and shipping firms benefit from increased demand, reflected in stock market gains. Environmental compliance and sustainable mining initiatives become a focal point for regulatory and operational planning. Currency and monetary policy face profound implications. The discovery of a major domestic gold reserve strengthens the US dollar's position in global markets, potentially affecting exchange rates, trade balances, and foreign investment. Stock markets for export-driven companies adjust as international competitiveness and currency valuation shift. Central banks and policymakers reassess strategies for reserves, interest rates, and inflation management. Technology sectors experience both direct and indirect impact. Companies specializing in mining machinery, automation, and geological analytics see accelerated investment and R&D funding. Additionally, gold-intensive industries such as electronics, jewelry, and aerospace benefit from more predictable and potentially lower material costs. Stock valuations for high-tech firms integrating gold into production processes reflect anticipated efficiency and profitability gains. Consumer markets feel indirect effects. The influx of gold into the economy can influence investment behavior with increased interest in gold-backed securities, ETFs, and jewelry. Retail markets for luxury goods experience heightened demand, while financial services offering gold-related investment products see revenue growth. Stock markets for consumer-facing companies, particularly those targeting wealth and investment segments, reflect these shifts. Corporate strategy pivots toward capitalizing on the resource boom. Major conglomerates evaluate partnerships, mergers, and acquisitions to secure stakes in mining operations, refining facilities, or logistical networks. Stock prices for companies executing strategic expansion rise, while those failing to engage in gold-related opportunities face investor scrutiny. Regional development accelerates dramatically. Communities near the discovery site experience a surge in housing construction, commercial activity, and infrastructure investment. Local governments benefit from increased tax revenue, enabling expansion of public services, schools, and transportation networks. Stock valuations for construction firms, building material suppliers, and infrastructure-related companies respond to anticipated regional growth. Global trade and commodity markets respond. Other gold-producing nations monitor U.S. production capacity, anticipating potential impacts on global supply, pricing, and investment flows. Stock markets in countries dependent on gold exports adjust to reflect competitive pressures and potential shifts in market share. International investors reassess portfolios based on changing supply dynamics and geopolitical considerations. Financial markets experience volatility followed by stabilization. Initial speculation drives rapid price swings in gold, resource ETFs, and related equities. Over time, market participants recalibrate expectations, reflecting long-term production capacity, extraction timelines, and geopolitical stability. Stock indices related to commodities, mining, and financial services adjust accordingly. Corporate debt and capital markets adjust to new opportunities. Companies seeking to expand mining operations or refine infrastructure access debt markets for funding. Lenders evaluate creditworthiness based on projected revenue from gold production. Stock valuations for financial institutions reflect the anticipated growth in corporate lending and investment banking activity. Environmental and regulatory oversight becomes central. Large-scale mining operations require compliance with federal and state environmental regulations. Companies invest heavily in sustainable practices, waste management, and reclamation projects. Stock prices for firms demonstrating strong environmental stewardship reflect investor confidence in long-term operational sustainability. Energy markets experience secondary effects. Mining operations demand significant electricity and fuel, increasing regional energy consumption. Energy companies benefit from rising demand, reflected in stock gains for utilities, oil, gas, and renewable energy providers. Investments in infrastructure to support mining energy needs accelerate. Labor markets evolve with new skill requirements. Technical training, vocational programs, and engineering education expand to meet industry demand. Workforce development initiatives attract investment from both public and private sectors. Stock markets for educational services and professional training firms reflect anticipated revenue growth. Insurance and risk management sectors see increased demand. Large-scale mining operations require comprehensive coverage for equipment, operations, environmental liability, and worker safety. Stock valuations for insurance companies, reinsurance firms, and risk management providers respond to increased underwriting activity. Technology adoption accelerates in mining and logistics. Automation, AI-driven geological analysis, robotics, and remote monitoring reduce operational risk and improve efficiency. Stock prices for tech providers supplying industrial automation, AI platforms, and specialized mining technology reflect anticipated growth opportunities. Corporate earnings projections are revised upward across multiple sectors. Mining companies, industrial suppliers, logistics operators, and technology firms anticipate revenue growth. Stock markets reflect investor optimism, tempered by consideration of extraction timelines, regulatory compliance, and operational risk. Consumer behavior evolves. Gold-backed investment products gain popularity with increased purchases of ETFs, coins, and jewelry. Luxury goods markets expand as wealth and consumer confidence rise. Stock valuations for retail, financial services, and jewelry companies respond to these trends. Financial markets diversify exposure. Investors increase allocation to domestic mining firms, resource-related ETFs, and gold-backed securities. Portfolio strategies adjust to incorporate long-term expectations for domestic gold production, market stability, and revenue growth. Stock indices reflect sector-specific gains alongside broader market recalibration. Corporate mergers and acquisitions accelerate. U.S. and international firms seek strategic stakes in mining operations, refining capacity, or logistics infrastructure. Stock valuations for companies engaging in M&A activity reflect anticipated synergies, revenue potential, and competitive advantage. Global investment patterns shift. Foreign investors seek exposure to U.S. gold production via joint ventures, equity stakes, or derivative instruments. Stock markets respond to increased foreign capital inflows, reflecting confidence in U.S. resource security and economic growth potential. Monetary policy implications are significant. The Federal Reserve may adjust strategies related to reserves, interest rates, and currency management. A domestic gold surge strengthens the dollar's global position, potentially influencing trade balances and investment flows. Stock markets reflect the anticipated macroeconomic impact of gold-driven currency stabilization. Regional economies experience structural transformation. Areas surrounding the gold deposit see rapid urbanization, infrastructure expansion, and diversification of local industry. Stock markets for companies serving regional development, construction, and services benefit from anticipated growth. Corporate governance faces scrutiny. Investors demand transparency, sustainable practices, and long-term strategic planning in mining operations. Firms demonstrating effective governance, environmental stewardship, and operational efficiency see enhanced stock performance. Consumer and investor confidence rises. The perception of increased domestic wealth and resource security boosts market sentiment. Stock indices reflect confidence in long-term economic stability, while sector-specific gains in mining, infrastructure, and consumer goods are observed. Labor markets see upward pressure on wages. Skilled positions in mining, engineering, logistics, and technical services command higher compensation due to increased demand. Stock valuations in related sectors reflect potential revenue gains alongside increased operational costs. Financial institutions benefit from expanded lending, investment banking activity, and asset management opportunities. Stock prices for banks, credit institutions, and investment firms reflect both revenue potential and risk mitigation strategies. Global commodity markets adjust. Increased U.S. gold supply influences global pricing, affecting other producers and investors. Stock markets for gold mining firms outside the U.S. reflect competitive pressure and reduced revenue expectations. Energy infrastructure investment expands. Mining operations stimulate demand for electricity, renewable energy, and fuel. Stock valuations for energy providers and infrastructure firms reflect anticipated long-term demand growth. Consumer spending and wealth distribution adjust. Influx of resource-related wealth into local and national economies increases disposable income, stimulating consumption in retail, real estate, luxury goods, and services. Stock markets respond positively to anticipated revenue growth across multiple sectors. Technology and industrial innovation accelerate. Mining, refining, and logistics operations invest in advanced technologies to optimize efficiency, safety, and sustainability. Stock prices for industrial tech providers reflect investor confidence in long-term adoption. Corporate debt markets evolve. Firms expand capital structures to finance mining, refining, and logistics operations. Stock valuations for banks and lenders reflect expected growth in lending activity and repayment capacity. International trade relations adapt. The U.S. strengthens its position in global commodity markets, attracting foreign investment and increasing geopolitical leverage. Stock markets respond to anticipated revenue gains, trade balance adjustments, and strategic positioning. Financial markets gradually stabilize after initial volatility. Investors reassess long-term production timelines, extraction feasibility, and market absorption rates. Stock indices reflect sector-specific gains and broad market recalibration. Corporate strategy focuses on sustainability, efficiency, and value maximization. Firms invest in environmentally responsible mining, automation, and logistics solutions. Stock markets reward companies demonstrating long-term viability and operational excellence. Regional and national economic growth accelerates. Tax revenues increase, public services expand, and infrastructure development creates long-term economic benefits. Stock prices for construction, engineering, and regional service firms reflect anticipated growth. Global gold market positioning changes. U.S. production dominance influences pricing, reserves, and investment flows worldwide. Stock markets for international mining firms adjust to reflect competitive pressure and shifting market dynamics. Consumer investment patterns evolve. Increased domestic gold availability encourages diversification into gold-backed ETFs, bullion, and luxury markets. Stock valuations for financial services and consumer-focused firms reflect anticipated revenue growth. Labor markets and employment sectors adapt to sustained mining and infrastructure demand. Workforce development programs expand, attracting talent and increasing skill levels in affected regions. Stock markets reflect broader economic growth and rising consumer confidence. Corporate innovation, investment, and diversification accelerate. Firms expand into downstream processing, refining, and international distribution. Stock prices reflect anticipated revenue growth, competitive advantage, and long-term stability. The scenario illustrates how a major gold discovery in the U.S. could transform the economy, financial markets, labor sectors, technology adoption, consumer behavior, and global trade. Stock markets reflect short-term volatility, sector-specific opportunity, and long-term growth potential. Ultimately, domestic production of a massive gold reserve strengthens the U.S. economy, attracts investment, reshapes industry strategy, and enhances global economic influence. Stock markets adjust to reflect both risk and opportunity in a resource-driven economic landscape, creating a transformative period in American financial history.